families with qualifying children can receive a tax credit to help offset the costs of raising kids. This change is a result of the Inflation Reduction Act, IRA, passed in 2022. Understanding the Additional Child Tax Credit, ACTC. What is the ACTC? The Additional Child Tax Credit, ACTC, is a tax credit provided by the IRS to eligible taxpayers with qualifying children under the age of 17. The standard deduction is the amount of money that taxpayers can subtract from their taxable income without needing to itemize their deductions. Understanding the IRS refund timeline. The IRS typically begins processing tax returns in late January, but refunds are not issued until mid-February. This delay is due to the IRS's processing time and the need to verify the accuracy of the tax returns. Factors affecting refund timing. Several factors can impact the timing of tax refunds, including the complexity of the tax return, the amount of tax owed or refund, due the speed of the taxpayer's bank account processing, the IRS's workload and staffing levels, adjustments to the standard deduction. The standard deduction is adjusted annually for inflation. This adjustment ensures that the deduction remains relevant and effective in reducing taxable income. How inflation affects the standard deduction. Inflation can impact the standard deduction in several ways. Increased costs. As inflation rises, the cost of living increases, and taxpayers may need to adjust their deductions to reflect these changes. Taxpayer burden. If the standard deduction is not adjusted for inflation, taxpayers may bear a greater burden in terms of taxes owed. Economic impact. The standard deduction plays a significant role in shaping the economy, and adjustments for inflation help to ensure that the deduction remains effective in reducing taxable income. Implications for taxpayers. Implications for taxpayers. The IRS's decision to delay refunds until mid-February has significant implications for taxpayers. The adoption credit, a lifeline for families. The adoption credit is a vital financial incentive for families who have adopted a child. This credit can significantly reduce the financial burden of adoption, making it more accessible to those who want to provide a loving home to a child in need. Eligibility requirements. To be eligible for the adoption credit, taxpayers must meet certain requirements. These include being a U.S. Understanding the adoption tax credit. The adoption tax credit is a valuable benefit for taxpayers who have adopted a child. This credit can help reduce the financial burden of adoption, making it more accessible to those who want to start a family. Eligibility requirements. To qualify for the adoption tax credit, taxpayers must meet certain eligibility requirements. These requirements include: the child must be under the age of 18. The child must be adopted from a foreign country. The taxpayer must have paid qualified adoption expenses. The taxpayer must have filed a tax return. Qualified adoption expenses. Qualified adoption expenses include court costs and fees, attorney fees, travel expenses, home study fees, other expenses related to the adoption process. Claiming the credit. To claim the adoption tax credit, taxpayers must complete Form 8839, Qualified Adoption Expenses. The credit is also subject to phase-out limits, which means that the amount of the credit decreases as the purchase price of the vehicle increases. Understanding the electric vehicle tax credit. The electric vehicle tax credit is a significant incentive for individuals and businesses to adopt electric vehicles, EVs, as a sustainable and environmentally friendly alternative to traditional gasoline-powered vehicles. The credit is designed to encourage the adoption of EVs by providing a financial benefit to taxpayers who purchase qualifying vehicles. Key features of the electric vehicle tax credit. Non-refundable credit. The credit is non-refundable, meaning that if you owe less in taxes than the credit amount, you cannot get a refund for the excess amount. Phase-out limits. The credit is subject to phase-out limits, which means that the amount of the credit decreases as the purchase price of the vehicle increases. Qualifying vehicles. The credit is available for the purchase of qualifying electric vehicles or fuel cell vehicles that cost $25,000 or less. The seller must also provide the buyer with a copy of the title and a bill of sale. The seller must also provide the selling price of the vehicle to the buyer.